Look at this, folks. We're now down 316 points. Are we going to hit the lows back at the session down 348? Let's get to Ashley Webster. You're on the floor of the New York Stock Exchange.
Wow, you know, Liz, wiping out whatever profits we saw or gains we made earlier in the week. We knew it was going to be volatile today. It's quadruple witching where we have those futures and options expiring. Investors have to close out their positions, so we can expect heavy volume. But as we know, the decline in oil and concerns about the global economy, all of that put together, investors are skittish and they are staying away from stocks. And as you can see, down 319 points now. The VIX, the so-called fear gauge, up 6% this week alone, up more than 5% today at 20.22. So certainly, as we head towards the end of the year, whatever happened to the Santa Claus rally, not there today, that's for sure. And the volume up again, I think, Liz, because we do have that quadruple witching going on where people have to close out their positions in those options and futures.
Although I would say that volume has actually been above the averages that we've seen recently. And we've been seeing some real skidding right now in this final hour. Jim Frischling is with us, and you're with NewOak. And Jim, what's going on here with the markets? We're heading back down, and I want people to view this. We're down 330 points for the Dow, low of the session down 348. Do we hit the lows?
I think we're gonna continue to trade into the lows. Look, I think a lot of the things that have been tailwinds for this market have been very positive. People are starting to understand now they're becoming tailwinds. The Fed's move is not going to derail everything. The signaling that there's more rate hikes to come, that means borrowing costs are higher. Again, these are double-edged swords. The consumer is doing better, but again, labor costs are going up. That's great for the consumer. It makes it squeezes margins on these companies.
Yeah,
so some of the headwinds are going to become problematic for this market.
And by the way, we do have a bit of a corrective bounce in gold, but so what? Ashley, are you still with us? Keep Ashley on the floor. Yes, Ashley?
Yeah, go ahead.
Okay, so right now, Jim just made the call. We're going to trade into those session lows. We could very well fall through that floor. We're down nearly 2%. What are the traders saying right now?
Well, you know, some of the traders say that some of that skittishness among the investors is that concern about the high-yield bond market. That's still, as we heard earlier this week, a lot of concern there. That hasn't gone away for sure. Yeah, the junk world is causing some certain skittishness out there.
Jim, Teddy was at the top. Hold on a second. Teddy Weisberg was at the top of our show saying, be really careful in these next couple of trading sessions heading into Christmas and then New Year's, because people are doing all kinds of things that are quite specific to their portfolios. They're cleaning them up. They're selling some of their losers. But right now, this does underscore how dangerous it can be. But is this a buying opportunity?
I think selectively it is. I mean, you see with the spike, with the rise in interest rates, banks, financials are going to start raising certain the prime rates and doing better. They're not going to raise the deposit rates and pay the consumer better. But I'm so happy Ashley raised the point about the high yield market, because I'm telling you, is this a one-off or are there more to come? And I have a hard time believing this is the only high yield manager. I know people are going to shove that aside and say it's not going to hit equities. But when markets fall dramatically, when liquidity dries up, prices drop, people sell what they can, and be careful the contagion into more liquid markets like equities.
Okay, let me just articulate. With the Dow down 330 points, you've got some real losers here, among them Disney, down more than 3%. And so that's what is really coloring this market, Jim. If you were a buyer right here, what would you pick up?
Again, what I like right now are the financials, banks that act like banks. They have big lending books. They Wells Fargo, PNC, USB. These are banks that have more floating rate assets than they do liabilities, and the increase in rates are going to be beneficial long term. Okay. I also like the airlines. Oil down. They're not passing the savings to consumer. Their costs are dropping. Better margins. Consumer feels better. They fly more. Airlines going to do better.
Okay, the gains for the week are gone, and on top of it all, as we told you earlier, Apple is in a bear market. We've got names that are getting killed at the moment, but I should mention that the only name in the green for the Dow Jones Industrials is now Caterpillar. That's not a surprise, because it appears that the sort of heavy industry was maybe a slight little positive here. But oil, you cannot discount that oil is plummeting even in the aftermarket session on a Friday.
No, again, oil is it's a supply-demand equation, and it is hurting the high-yield market. It's clearly impacting the high-yield debt market, and there are a lot of good jobs in the oil space. So while it's good for the consumer at the pump, and I like it for the consumer, it's going to take a lot of jobs out of this market.
Ashley, what are the traders most worried about going into next week?
Well, it's interesting, certainly the volatility and people panicking and selling into this. I find it's interesting, we talk about financials. I asked a trader, why are the financials leading the worst performing sector today? Because you'd think in a higher interest environment, they would be on the way up because they're getting more money back on their loans. A lot of people said they're scratching their head. There's no real explanation for it.
Okay, hold on. We did just touch the low, a brand new low of the session, down 349 points. Now we're going down 350 points. The S&P lower by 33. Jim, this is more than just quadruple witching, or because we don't want to get people all riled up as they're going to holiday parties tonight. Sorry.
Now, I think this market has held up incredibly well. I know it doesn't look like that today. We've weathered storms before, but I will tell you that I think people are starting to digest that if the Fed's going to be adding about another 175 basis points of interest rates, there is going to be effect on companies. A lot of the buybacks are going to be slowing, a lot of the financial engineering. So again, I'm moving to a neutral stance. I think the equity markets are still an interesting place, but you have to be very selective because valuations are stretched and a lot of the benefits are no longer going to be at the table. And I think the Fed just said, guess what, guys? We're done with the lowest rates.
And we saw a cockroach emerge over the past several weeks, and that is the junk bond world. One or two names, but when you turn on the light and you see two roaches scurrying, there are many more, but there is the junk bond issue over or very fearful. Ashley just mentioned people on the floor are concerned.
I have a hard time thinking it is over. I have a hard time thinking it's small. I know equity guys don't want to hear this, but remember when the mortgage market, and I'm not going to link the two, when the mortgage market started to crumble and show signs of stress, the equity guy said, not our problem. Guess what? It does lead in and bleed into your market. I think the high yield market, the bond market, there are going to be some liquidity stresses. We're going to see some other funds under pressure. I don't think it's going to be a huge contagion, but more pressure in the junk bond market.
Isn't it interesting that the energy names when it comes to solar are some of the better performers? SunPower is up 3 3/4%. We just had the CEO on. If that budget plan gets signed by the president, it's clear sailing for them. But at the moment, a lot of red on the screen. Thank you so much.
Thank you so much.
Jim Frischling of NewOak and Ashley Webster on the floor. That's going to do it on